We also got some breaking news surrounding the Netflix Warner Brothers Discovery deal. David Faber joins us now with more from the New York Stock Exchange. David.
Yeah, Andrew, of course, we've been waiting for Warner Brothers' response to the latest iteration of Paramount's offer to acquire that company. In the face, of course, as you know, the merger agreement Warner Brothers currently has to be acquired by Netflix. And we've gotten that response this morning. The 14D9 has been filed. And no surprise, of course, it's a rejection. You can see it right there, unanimously recommending stockholders reject the offer, not tender. Of course, that tender remains out there. And they've unanimously resolved to recommend the Netflix merger agreement as in the best interests, of course, of stockholders. The new iteration, as you guys well know, involved a personal guarantee from Larry Ellison for the $40.4 billion in equity that is part of financing this transaction for Paramount. That was something that the Warner Brothers board wanted and made clear last time. This time, the focus seems to be more on a lot of things that have yet to be made clear, at least, again, in the opinion of the Warner Brothers board, including things like the $2.8 billion breakup fee. Warner Brothers would be obligated, they say, to pay that to Netflix if they were to take the Paramount deal. And that comes from the entity that is Warner Brothers, essentially. Now, Paramount has not made it completely clear where that money would be coming from, but simply said it would be a liability that they would take on. And they kind of start adding things up. Well, you take that $2.8 billion, you add a $1.5 billion fee for failing to complete the debt exchange for global networks, also interest of $350 million that's incurred. You add all that together, and should this deal not happen, the $5.8 billion, I know it gets confusing, reverse break fee that Paramount would have to pay would actually only end up being $1.1 billion. Not enough, not nearly enough. They want a lot more clarity, it would seem, around the $2.8 billion, not to mention the bridge loan, a lot of other things. And finally, they seem to rest a lot of their rejection as well on just the total amount of debt being taken on by Paramount in what they call the largest leverage buyout of all time. And they go on from there to sort of discuss many of their concerns around the fact that, you know, the leverage ratio for the combined company and the risks that are inherent in the structure in terms of at least sometimes in their, and this is their writing, of course, that you can see lenders say, nope, we got to back off or we want better terms and things of that nature. And that can, of course, have a negative impact on the ability to complete the deal. So, guys, no big surprise. It's a long filing. We'll go through a lot more of it for you, that there was a rejection here. To come back to the bigger picture, of course, Paramount has offered $30 a share all cash for all of Warner Brothers. Netflix original deals were $27.75, $23.25 in cash, the remainder in stock. That is collared. However, Netflix shares have fallen below the bottom of that collar, impacting the overall value of the deal. Let's call it around $27.40. And then you've got to value global networks. And, Joe, I don't think we want to talk about how you'd value global networks, given the performance of our parent company's stock price over the last couple of days.
We do want to talk about that.
We want to talk about that. But the one question I had before we get to the Versent of it all, which is the valuation of Versent stock,
and other things,
and maybe how that's going to impact this longer term. The thing that I can't understand about this particular rejection is they're now starting to eat away effectively at the quality of Paramount itself. And that makes it harder if, in fact, they come back with a higher bid to accept, I would imagine, or to justify. If you start to say that you think that the company itself, right, given the amount of debt it has and everything else, is somehow a house of cards and this and that, and I would imagine if they come back with $3 more, the debt issue is no different. And so it's interesting. Originally, they sort of skated in this way where they were trying to basically get a new higher bid. This statement, I'm curious, David, whether you think this is really an effort to still get I mean, I think they want a higher bid, I would imagine, but it makes it harder.
You know, I think that's a great point, Andrew, because it is a bit different here in terms of approach. As you said last time, a lot of the focus was on, well, we don't really know where to go if you don't want to close in terms of the money in the trust, the Ellison family trust. Paramount clarified that and answered that question. But here, these are harder things because, yes, this is an enormous, in some ways, LBO, an enormous amount of debt being undertaken by the company. And to your point, in their shareholder letter that accompanies the 14D9, They say many prior large LBOs illustrate acquirers or their equity and debt financing sources can and do seek to assert failures of closing conditions in order to terminate a transaction or renegotiate transaction terms. And to your point, it's not clear to me how that would go away if you went to 32 or 33 or 34. In fact, you'd only have a higher leverage ratio than is currently the case, which conceivably would even exacerbate those fears on the part of Warner Brothers board.
This is why lawyers make so much money, I think, David, because this was a calculated sort of a strategy with thinking about what's next. I think from Paramount. Initially, I thought if you really did have Larry locked in, and that's what they tried to do last time, I would think the debt becomes less of an issue if you really had him locked in. And maybe so if I were, that's what I would do if I were Paramount. I would come back and say, yeah, debt is this, debt is that, but we got 500. I don't know what he's worth now. Oracle's down, but you got that.
He's right. He's worth 300 billion, 400, whatever the number is. Right. To your point.
But Netflix, I'm still telling you, in Hollywood, there is constant. I mean, they're damned if they do. There's consternation about Netflix taking over this storied asset, but there's also consternation about MAGA and the ties at Paramount about that. But David, right now, if I were a shareholder, purely a shareholder, I would not believe that stub is worth, what are they saying, $4 to $5? And
well,
this
they're
is
not
where
interesting, Joe. They're not. I mean, again, the 14D9 just filed. It's very long, but they haven't given us any clarity around how they view the stub. Is my understanding.
Because it should be valued at less than Versent, David. And Versent right now is at. Admittedly, when it can trade, a lot of people are just going to sell it. But the market cap of Versant's like under $6 billion now, isn't it, David?
And the multiple to not just free cash flow but to EBITDA is incredibly low. If you were to apply the same multiple, now you can argue, and I hope it's true, that there's been a lot of forced selling in Versant as a result of people who've gotten the stock who don't want it, including index funds that have to get rid of it. That said, the multiple is very low. If you were to apply anywhere near the same multiple, even up a little bit from here, Joe, on global networks, given its leverage structure, you're not going to get a value that's particularly high. And then this gets to a key point, which is it has $15 billion in debt that's going to be associated with global networks. Do you need to reduce that to make this a more robust entity? And for every dollar you reduce that, Netflix reduces the overall price that it's paying. And
there's the collar, and there's the spinoff's not even done. If I were a shareholder and someone said 32 cash and you don't have to spin anything off, I don't see how you could turn that down. I don't, David.
Listen, your argument is one that I think a number of shareholders are making and will continue to make as well.
Mario would say that too. Give me 32 cash and I'm done.
And but they're going to get. It's not the tender. It's going to be the shareholder vote, and that is still a long way away, in which they're going to be potentially able to express themselves. But yeah, and the argument, as you say, that listen, if Ellison's there. They're not. Who cares? As long as they close the deal, I don't care what the leverage ratio looks like at Paramount. That's not my business. I'm getting all cash, right? So as long as you're confident in that as a shareholder of Warner Brothers, you're going to want the 30 most likely at this point,
David,
given the comparison in value to Netflix.
That the Ellisons just walk away. I mean, we've heard reporting that they've threatened that, or there's lots of debate inside about whether they should just walk. And if they did such a thing, would shareholders of Warner Brothers ultimately be satisfied?
I don't believe that that's likely at this point, based on my reporting, Andrew. You can never say never, of course, because it does appear that they very much want to control this asset. It's not clear to me what the future of Paramount looks like in some ways without it, or without some sort of a deal. But that's always a possibility, sure. And
then we've been talking all morning, and we're going to talk to Mike Cavanaugh later from Comcast. How do you contextualize the whole Versent of it all and the price of that in terms of how you think about the stub?
Well, I mean, if you just take the multiple, now obviously Paramount would love to say that, right? Just take the Versent multiple and put it on what Global Networks is going to be, and the EBITDA there and the leverage as it's been defined so far to us, and you get no value at all, virtually. I mean, the thing's going to have a leverage ratio as high as its multiple to EBITDA, maybe even higher. That's not good.
That's a dirty little secret.
Of course, but Joe, come on. 36.55.
but
I
if
mean,
you're
we're going
gonna-
to the moon, right? What did you used to say? Coiled spring? Yeah.
It looks like a coiled spring. No, but if you're going to hang your hat on, oh boy, there's a lot of debt with Larry in the background. I mean, I don't know if that holds any more water than, well, if this is worth $4, if it's actually worth, with all that debt, it's worth zero.
Yeah.
Speaking of debt, they have how much more debt? What is Versent? One time?
Yeah.
And what is this?
One
What
time.
is Global Network? What's that?
Closer to 4, I
15
think.
billion.
3.5, 4.
3.5 or
Somewhere
4.
there. I want to make
Yeah.
sure I get that right, but yeah, somewhere in there.